it's just this twice a year charade we go through with all the pre-budget speculation and all the fine-tuning the responses to meet a rule that's for 4 years out based on spending plans no one really thinks will be stuck to, and forecasts that everyone knows will change. It just, is this really the best we can do? Is this the best way to be making these decisions about benefits that affect some very vulnerable people's lives, or about public services we all rely on?
Hello and welcome to this edition of the IFS Zooms In. I'm Paul Johnson, Director of the Institute for Fiscal Studies, and this week we'll be looking at the Chancellor's spring statement recently presented to Parliament. Not a major fiscal event, I think it's fair to say, but nevertheless quite a lot of interesting and controversial things in there. So to pick apart the decisions and the trade-offs made by Chancellor Reeves, I'm joined today by two of my colleagues, namely Associate Directors Ben Zaranko and Tom Waters. So let's start with the big picture, Ben. Broadly speaking, what the Chancellor seemed to be doing was repairing a fairly small hole that had opened up in her fiscal numbers. So can you just take us through the big 3 or 4 choices that were made in order to do that, and indeed what that hole was and where it came from?
Yeah, I think this is best thought of as a holding pattern fiscal event ahead of the more significant moments we can expect later in the year. So changes from the autumn matter because the Chancellor was hoping that this wouldn't be a fiscal event at all. She was hoping that this would be a fairly low-key event where she presents some new forecasts, wouldn't make any big policy changes, leaving herself to have only one major fiscal event each year in around October or November. The reason why it didn't turn out quite like that is because the forecast got worse. We saw some disappointing growth numbers in recent months, the economy not growing as fast as we'd like, tax revenues not as high as were previously expected, and markets expecting interest rates to be higher for longer, which meant that the forecast for the public finances deteriorated a bit since the autumn, and because the Chancellor had left herself basically no space against her fiscal rules, she was on the wrong side of that line, leaving her with a bit of a repair job. She chose to tweak and fine-tune various bits of spending policy, particularly on public services, but more significantly on the benefit side, to precisely get herself back to where she was in October, leaving herself with the bigger decisions this summer in the spending review, and then potentially again in the autumn at the full budget. I'm going to go into the details of what she did, but it was effectively just the Chancellor doing about the bare minimum she could to get back to where she was in the autumn, where she thought it was appropriate to be then, heading into the summer.
Yeah, and it's worth just unpacking some of that. So, I mean, the first thing to say is that what the fiscal target she was aiming at is what we call current budget balance in 2029-30. So this is a forecast of where we might be in 4 or 5 years' time. There's obviously a lot of uncertainty about that. And what changed between October and this statement was that the Office of Budget Responsibility took the view that we'd be borrowing a bit more than they previously thought, as you say, Ben, as a result of slightly less growth, but more particularly actually higher interest rates on the government debt. And it's just worth saying we now have so much debt, and we're still issuing a lot of debt, that small changes in interest rates can make quite a big difference to the state of the public finances. So given that, she's shaved some money off some spending, so that the forecast, at least, is that we should meet that rule. But it is all very, very marginal, and because the Chancellor left herself with very little space back in October, she had to come and make some changes this time around. We'll come on to the big welfare issue in a moment. But what about the other aspects of spending? Back in October, the Chancellor set what we call the envelope for the spending review, which she's going to hold in June, where she actually allocates money to individual departments. She changed that envelope very slightly, but it was quite a tight envelope to start with.
It was, and I think the changes she made, had it been in a more exciting budget with a longer list of policy announcements, a lot of these things we probably wouldn't be digging into at all. The fact that some of these minor tweaks are getting such attention partly reflects the relative sparseness of this as a set of policies. The big thing, actually, that is significant that happened in the last few months is the announcement that the UK is going to spend more on defence. And in order to, quote unquote, pay for that in the short term and potentially the long term, we're going to spend less on aid. So we're going to be responding to changes in the international environment by boosting our defence budget. Hard power, if you like, paid for by less spending on aid. So maybe eating into our soft power a bit, if you want to frame it like that. And we saw some more details of that in the spring statement this week, which maybe we want to come back to this, maybe we don't, maybe it's just frankly too boring to translate into audio form.
No, I think it's not at all. Let's get into that. I mean, this is slightly nerdy stuff, but I think there's a little bit of skepticism around this table as to whether you can sort of really say, oddly enough, that cut in defence spend, that cut in overseas aid spending really paid for the increase in defence, because there's different flavours of spending going on here.
You're listening to this and you want to skip ahead a couple of minutes, I promise. We won't be offended.
Yeah,
we won't be offended.
What an appalling thing to say. I think this is absolutely fascinating.
This does matter because this was one of the ways that Rachel Reeves managed to rebuild that all-important headroom of hers, which she was clearly aiming for. And she's done it through sort of, if you're being cruel, you could call it an accounting trick, but through a technical change in the spending plans this government has. So the claim the government's making is that it's cutting aid, and that is paying for higher defence spending. Problem is, that's not really true in any meaningful sense. There's not as if there was a particular pot of money or pile of cash that's been shifted from one building to another. You could just as easily say higher borrowing is paying for the extra defence spending, or benefit cuts are paying for the extra defence spending. It's all sort of fungible. And what the government's done is it's cut aid spending, and only this is important, going back to the fiscal rules you were talking about, Paul, only day-to-day spendings or current spending on things like staff and running costs counts towards the government's borrowing rule. So it's cut about 3.2 billion from aid day-to-day spend. It's added 0.6 billion to defence day-to-day spend. And lo and behold, its fiscal rule has got 2.6 billion easier to meet. And the reason that is because almost all of the extra defence spending is going on what we call capital. So like equipment and kit and new tanks or new fighter jets, whatever it happens to be. And that may well be that that's the right thing to do. That might be what the Ministry of Defence have been asking for. It might be that militarily that's the most sensible thing. You might think that maybe pumping money into, investing in military kit might help some British businesses to grow, provide some good jobs. But it does suggest maybe they've done that because it makes the fiscal rules easier to meet. And you might think that, the precise nature of the fiscal rules shouldn't affect that choice. And it also means that a big chunk of that cut to the aid budget actually hasn't really gone to defence. It's gone to shore up other departments and protect them from deeper cuts than it otherwise would have faced. So this is all a long-winded way of saying what appears like a simple technical switch could, under the surface, have been sort of massaged in order to make the government's life a bit easier and perhaps undermine some of that messaging about the simple aid to defence transfer that we've heard.
Yeah, I think it's quite an important point, despite your protestation at the beginning there, Ben. There's at least a risk that it appears that we're making defence spending choices off the back of the fiscal rules, because like more than 90% of this money is going into capital spending, and the result is that if to the extent that you can think about allocating one bit of funding from one bit of government to another, because it's the current spending that's been cut off overseas aid and not increased in defence. It's allowed more current spending in other bits of the public sector.
Yeah, and maybe we don't need any more squaddies. Maybe we do just
probably can't find any. I mean, it's actually quite hard to recruit them.
Well, I suppose we've got an economy with close to full employment. But maybe we don't need more squaddies. Maybe what we do need is rockets and investing in equipment and capital. But only about 35% of the defence budget now goes on capital. And to think that that's about the right proportion, but of the extra spend, it's 90%, That's just a big difference, and one that hasn't really been explained or justified, which is why you have skeptics or cynics like us thinking maybe it's the fiscal rules at hand.
But maybe it's not. I mean, frankly,
Maybe it's not.
we don't know much about military strategy. In fact, what we know about military strategy could be easily put on the back of a postage stamp, at least in my case. Let's move from military strategy, Tom, to the sort of very different element of what the state does, which is the welfare state. And in particular, working age benefits, which is where I think the biggest of the changes announced in the last couple of weeks have come in, and in particular, cuts to planned spending on health-related benefits, disability and incapacity benefits. Perhaps you could just start by painting the sort of background picture as to what's been happening to spending on those working age welfare benefits, and within that, in particular, these benefits for people with health problems.
Absolutely. So if you look over the long period, if you look back since, say, 2009, we had cuts to the rest of the working age welfare system in coalition and in the second half of the 2010s. And that brought down the amount of spending on the parts of the welfare system that aren't related to disability. But we had a steady increase over that period of more spending on health-related benefits that accelerated then over the pandemic and is forecast to continue to increase. So to give a kind of a sense of scale, back in 2009, about 22% of the welfare budget was going on health-related benefits. That's forecast to increase to 45% by the end of the forecast period.
Just pause there. That's amazing. So you've gone from about 20% to about 40% of the working age welfare benefit. So 15 years ago it was about 20%, and the projection is it will be as a fraction, it will more than doubled over a 20-year period.
Yes, exactly.
Astonishing.
Exactly. And you know, the cuts to the rest of the system we saw in the 2010s were, you know, meaningful, significant cuts, but they were offset or even more than offset by these underlying increases in health-related benefits. And so that has been kind of going on for a while in the 2010s, accelerated over the since the pandemic.
And in pounds billion terms, we're looking at between 2020 and 2030.
Yeah, so we'd be looking at something like an extra 15 billion, between now and the end of the forecast, to be about an extra 15 billion on these health-related benefits.
I think we've already gone up 15 billion since 2020. So, I mean, these are big numbers. I mean, just the increase over this decade in health-related benefits is way more, for example, than we spend on the entire police force, for example, or 3 times what we spend on overseas aid. Just the increase, not the total.
Yes, yeah, exactly. And so it's not a total surprise that the Chancellor and the Secretary of State for Work and Pensions wanted to find some ways to get those numbers down, and that's what a lot of the reforms yesterday were about.
I mean, I'd go further. It's not. I mean, my view is it'd be a dereliction of duty not to have looked, at the very least, very, very hard at what's going on with these, with the spending on these benefits. Before we go on to what the cuts were, probably useful for listeners to understand what are these benefits. I mean, there are two big benefits. One called personal independence payment, and one effectively the health-related element of universal credit. Can you just tell us a little bit about those two different benefits?
So you get personal independence payment if you have a health condition which is expected to increase your costs of living. So you might need to get taxis more often because you've got problems getting around. You might need to have someone come and clean your house because you aren't able to do that. That's non-means tested, so doesn't matter how well off you are, you can get it. And it's not related to work as well. So a minority, but not totally insignificant minority of people that get that benefit are in work. That's PIP. The other half is the health element of universal credit. That is for those who are unable to work because of their health condition. And that is means tested. It's part of the universal credit system. And you have to essentially be assessed to be unable to work or have a limited capacity for working. And at the moment, those two parts of the system, they're kind of roughly similar scale. They're both contributing about half. A little bit more on the latter side, and a little bit less than half in disability.
So we've got a benefit that's not related to your income, but is assessed according to your potential needs for additional money, and one that's a means tested element really for those who are out of work. So, and they're becoming much more expensive over time. Many more people have been applying for and being given them. So, what's been announced? What are the changes?
There's a lot of changes. In some sense, it's difficult to summarize. So let me just give you the big ones. So in PIP, personal independence payment, they're trying to make it harder to qualify for the benefit. And roughly the way to think about what they're doing is you can qualify by essentially being somewhat unable to do lots of different tasks.
That's the current system.
That's the current system. And they want to say, you also need to be more significantly unable to do at least one thing. And so you can kind of think of that as it's cutting off the more marginal people, the people who are less. If you've got a very severe disability, this is very unlikely to affect you because you'd already be.
Can you give some example of the tasks, Tom?
So things like preparing food, getting yourself dressed, bathing yourself, and then there's mobility-related ones as well, things like getting around. But it also includes things like capacity with communication and budgeting, things like that.
Is this going to make it much harder for people with mental health problems to get these benefits?
I mean, not obviously. It's hard to say for sure, partly because of what we know in the data. But you might have thought that those who have mental health problems are like the more marginal people and are most likely to be on the lower levels of PIP. There's sort of 8 or so different levels of PIP, 7 or 8. But actually, it's actually people who get it for mental health conditions get on average about the same amount as those who get it for physical. So it's not obviously it's going to cut off mental health, people with mental health problems more than those with physical health problems. Okay, so that's just the first that's just the first change, first of N.
First of N. Yeah, there speaks an economist.
And that's saving the government, about £4 billion a year. Perhaps one of the things to say on that is the OBR expect a really big behavioural response from this. So they say if you just had imposed this rule in the past, it would cut 1.5 million people off, would see their personal independence payment reduced. But they reckon that number will fall to about 800,000 because the way that claimants behave and approach these assessments and the way that assessors assess them will change in response to the reform. And so people who kind of statically, if you like, wouldn't get this benefit will nonetheless be able to qualify.
Can we just explore a little bit what that means? I mean, that sort of sounds like the OBR is accusing 700,000 people of being likely to defraud the system. Is that sort of slightly unfair way of putting it?
I think they tie it both to the claimants and to assessors. So they're not giving us a split of the two. I think it's, if you're applying for PIP and you're hoping to get this particular element of it called the daily living element, and you might just qualify under the current system, under your, with what you're currently doing. Now they've raised the bar a little bit higher. Your incentive to approach the assessment in a way that might allow you to just get over the threshold is pretty strong. And I think it's probably fair to say a lot of these things, they aren't completely cut and dry. How able are you to get yourself changed or something? It's not like there's a really clear line in the sand of, somewhat, there's different thresholds. And so when you raise the bar, you do raise the incentive for people to end up a little bit further up that distribution.
And just to give a homespun example, my grandma always talks about how my granddaddy was a blacksmith who smoked about 60 a day and worked with asbestos, so had dodgy lungs. When he was assessed, he had to walk between 2 lampposts. And he sort of struggled through it and gritted his teeth and managed to just about do it. And then at the end they said, okay, no money for you. And she always bemoaned his lack of being street smart and knowing that he was supposed to stumble and not make his way to the lamppost. People can change how they behave and how hard they try if they know that there's a lot of money on the line, right?
Yeah, exactly. And we've seen from previous reforms that the government will make an assessment of how much they think they're going to save based on previous behaviour, and then the reform ends up not saving as much as they expected because people's behaviour changes.
Is that an argument for changing the system on a regular basis so people don't get too used to how it works?
Yeah, have a random system. Okay, we should get through the other.
That's only point number one.
That's only point one. Apparently. Okay, next one is the other major benefits, the health element of universal credit. This one's somewhat easier to describe. You get about an extra £5,000 a year if you get that. What the government's doing is they're saying for new claimants that number's going to be cut in half, and for everyone, those thresholds, those amounts are going to be frozen for the next 4 or so years, and so will fall in real terms. And so that's about a £3 billion saving by the end of the forecast period. I think one really important thing to say about this one is because it only affects the bulk of the effects only for new claimants. That's only new claimants that get hit by half. I see half the value reduced. It means that to get the full effect is only felt when kind of everyone has flowed off the system, and all the current claimants made a claim since this reform, and that happens really slowly because people stick on these benefits for a very long period of time, and so even by the end of the forecasts, the OBR think only about a quarter of the rollout will have been completed.
Okay, so the savings that the OBR scores by the end of this Parliament are only a quarter of the long run savings.
Yeah, it's not a quarter because of the freeze interacts with it differently, but the long run savings much bigger. So not 3 billion, but 8.5 billion. And so in the long run, this is actually a really big cut to the welfare system, but it won't be felt for a long time. And then another thing on the final thing on the health related benefits that was announced was actually a cancellation of an existing plan policy. So the previous government said we're going to make it harder to qualify for the health element of UC. That got struck down by a court, and the current government has sort of confirmed they're not going to go ahead with that. So relative to previous plans, that's making the system a bit more generous.
Okay. So N turns out to be 3.
I mean, we could go on. We can set N to 3.
I think those are the main changes. It's worth saying that that most of that was announced a week before the spring statement by the Work and Pension Secretary Liz Kendall. But when Rachel Reeves stood up and described the changes, she actually made a couple of additional tweaks. One was to not only halve the amount, the health-related element of universal credit for new claimants, but then to freeze it indefinitely, as far as we know.
For 4 years, I think.
For 4 years from that point. But also alongside these takeaways, these reductions in benefit generosity, there is a small increase in the value of the standard rate of universal credit for those people who don't have health problems. And Rachel Reeves made that increase in generosity very slightly less generous than Liz Kendall had announced. And and that bit of the change looks suspiciously like just an attempt to meet these fiscal rules that Ben was talking about. I mean, Ben, one of the most extraordinary things in a way, and again, this is getting a little bit nerdy about
It's the right podcast for it.
Absolutely. About the changes that we saw was that they almost literally to the pound led to borrowing in 2029-30 to be forecast to be exactly the same as we had back in October. And it's one of the things that makes one wonder whether this was more driven by a spreadsheet than driven by policy priorities.
Well, one interpretation is that they started from effectively, we want to be able to say we have restored the headroom in full, and everything else followed from that, and policy has been tweaked and fine-tuned, whether it's knocking an extra pound off the main rate of universal credit, or whether it's changing the capital resource split of the extra defence money, or whatever else it happens to be, to try and get to that number exactly. If that was the case, I think it's genuinely impressive they managed to do it. To like 2 million, I think is the difference. In the context of a £3,000 billion economy, that's like amazing. Well, especially as my understanding was the Treasury find it quite hard to know exactly how the OBR is going to treat stuff, so they often leave themselves a buffer just in case. So I don't think we can rule out the idea that they were aiming to get close to the previous level and just accidentally ended up doing it exactly. I really don't think we can rule that out. But this doesn't really matter. The point is that it's spuriously precise anyway. There's so much uncertainty around these benefit costings. There's so much uncertainty around the economic forecast. Even just what Trump announced overnight since the spring statement and what we're talking about now. That might change it by, well, certainly more than 3 million, but precisely how much I don't think
So
we know.
he announced tariffs on car imports to the US. Is that right?
Yeah, exactly. So, my friend who works at Nissan in Sunderland probably is having a bad day, for instance. So, these things all matter. Forecasts move around all the time. Aiming to meet them so precisely is, a fool's game, really. And I don't think it should be the thing governing whether it's governing the appropriate mix of military spending or whether it's governing the precise right level of some of these benefit parameters or anything else. I think that the wording you used, Paul, was they've lost the wood for the trees, or the tail's wagging a dog, or some other sort of helpful metaphor or analogy.
So can I ask about it? So one thing that seems something I struggle to understand about this is there's 9.9 billion pounds of headroom. So I can understand why, if the headroom previously was zero, they might want to return it to exactly zero. Then you say, well, we're meeting the target. But what's the kind of explanation for wanting to return to 9.9 billion pounds? Like, isn't the point of headroom is to allow it to reduce in some sense, and or is like the kind of implicit fiscal target is actually it's not current budget balance, it's current budget balance plus 9.9 billion.
Good question. I think, as I said, I think it can only be rationalised by a desire to be able to say we have restored the headroom in full. We had just this much space in autumn, and we've got back to that exactly. I can't imagine another reason why. I think you might go for around 10 if you were going for rather than 9.9. It's really hard to make sense of. I think that's it. I think that if the downgrade had been smaller, so the OBR downgraded their forecast by about 14 billion. So if the Chancellor had done nothing, she'd have been missing a target by about 4 billion, assuming some other things. But that would have been a small miss. Let's say the OBR had downgraded the forecast by, 7 billion. So she'd have had about 3 billion of headroom. Now that's basically nothing. But she could have then standed up, presented some forecasts to the House, sat down again, and we'd have all gotten to bed much earlier last night. It is a little bit of a silly game. I mean, I guess it's partly about signalling and convincing markets and so on that they're serious.
I mean, it's worth saying here that we're in the weeds a little. I mean, what we're not saying is that there's loads of space for loads of extra borrowing if the Chancellor wanted to do that. I mean, one of this is really about the sort of use of these very precise rules.
Right.
One of the problems facing us is that we have a vast mountain of debt and we're spending huge amounts on debt interest at the moment. So just to be clear to listeners, what we're not saying here is Rachel Reeves could go out and borrow whatever she wants. What we are saying is that fine-tuning everything to a very precise number with all of this uncertainty shouldn't be the thing that drives policy. But given that, it's we remain the case that this, given the fiscal framework we have, there's very little so-called headroom against that target, lots of uncertainty, and a budget coming up in the autumn. And I suppose one of the things I'm concerned about is that with all of that uncertainty and with, I think, a lot of risks on the downside here, what President Trump might do, what might happen to productivity, what might happen to interest rates, all of those sorts of things, there's a chance that we'll run out of fiscal headroom again between now and the autumn. And then, not only will the Chancellor potentially have to come back with some more tax rises, we're going to get loads and loads of speculation, including from us, about what those tax rises might be between now and the budget.
I suppose we don't have to speculate about tax rises. We could make a collective vow of silence right now between the three of
I don't
us.
think we'll do that.
Well, I guess it's a bind partly of the government's own making and partly of a really tricky inheritance and the fact that it's just a difficult time to be making these sorts of decisions. I mean, the decision to leave themselves basically zero headroom, or 9.92134 billion of headroom against this very a numerical target that's fixed and is a pass-fail rule. That's their own choice. And that's what leaves us so exposed to, forecast changes or a slight change in the OBR's judgment or a new tariff policy or whatever it else happens to be, that can shift us from being just on the right side of that line to the wrong side of the line. And then, all the speculation about what should do in response kicks off. But, saying you should have had more headroom is akin to saying you should have done more tax rises or spending cuts. And that's clearly hard politically. The Treasury is going through what I imagine is a very difficult set of negotiations with departments. If they had an extra 30 billion of headroom, I can imagine the NHS turning around and saying, well, you can afford to give us a bit more. You've got 30 billion of headroom. And so maybe keeping that to a minimum helps them out there. And, it's not a clear cut. And you obviously should have this number. There is no right number and there's a judgment to be made. But it's just this twice a year charade we go through with all the pre-budget speculation and all the fine-tuning the responses to meet a rule that's for 4 years out based on spending plans no one really thinks will be stuck to and forecasts that everyone knows will change. It just, is this really the best we can do? Is this the best way to be making these decisions about benefits that affect some very vulnerable people's lives or about public services we all rely on, etc., etc.? It just makes you a bit grumpy that this is where we've ended up and that this is my job.
None of us got a lot of sleep last night, so we're possibly being a little bit grumpier than usual, which suggests perhaps we ought to start bringing this to an end before we all get much too grumpy. But
can I say something more positive then?
Oh, yes,
just
please.
to offset my recent grumpy thing. I think one of the more substantive things in the announcements yesterday, particularly in the OBR's assessment of the announcements, is them scoring some supply side benefits to the economy from the government's planning reforms, which is, the sorts of thing that I've heard you say multiple times, Paul, sort of thing you want to do, you want to get growth going. I think about things like planning reform, and I suppose this government is, and they've managed to convince the OBR to score some benefits of that as not just boosting house building, but also bringing wider economic positive spillovers, especially in the longer term, beyond the forecast horizon. And there's a sort of thing that we tend to say government should be doing. It's nice to give credit to them doing so. And also, even though times are hard and she's having to make savings, the fact that capital investment budgets have been protected is something that I think is commendable. They haven't just reached for, let's cancel that big building project because it's the easiest thing to do when we need to make a bit of a cash saving. So that's good as well. So there are some bright spots, and I don't want to sound incessantly grumpy.
That's good to hear. And you're absolutely right, of course. I mean, I don't think there's any question but that things like planning reform and making it easy to build stuff is going to help. The economy. I mean, the government, as ever, could go further with those reforms, and it needs to be very careful that it doesn't do things that undermine growth, increasing taxes on employers or increasing regulation on housing and employers or increasing stamp duty and so on, like it did in the October budget, are things that might want to avoid doing more of in the pursuit of growth. I'm immediately grumpy, aren't I? But I'm going to give Tom a chance to be grumpy again. Data and statistics, Tom. One of the things that the Bank of England has complained a lot about recently is the quality of some of the data from the Office of National Statistics, including data on employment and earnings and those sorts of things. And we saw some more complaints to the Office of Budget Responsibility, saying they didn't really understand the ONS data on productivity. And we've published something this morning saying, the government just published something saying there was a great big fall in income last year, which we don't really believe. Just have a bit of a grump about data, Tom.
Yeah, in general, we're very excited about data in Rosemount Street. But the recent situation on the surveys has definitely been bad. So it's been quite well publicised now that the labour force survey, which is what we mainly rely upon to know how many people are employed, amongst other things, has got much worse in quality. Really, really big declines in the number of people responding to the survey since before the pandemic. I think they've managed to get up a little bit recently, but still, when you see something like that, you really got to worry. Well, are the people now not responding who were responding before the pandemic, are they very different? And so we're getting an unrepresentative picture of the population. That makes it hard to know how many people are employed. If you don't know how many people are employed, that's going to mean you can't really tell what productivity growth is, and that also makes things very difficult for the OBR because productivity growth is kind of like the most important component of their forecast. And then, as you say, the data we have on incomes, which is what we rely upon for knowing what's happening to poverty and inequality as well, it looks like that has been infected by the same disease. Again, we've seen significant declines in response rates. And yeah, if you just look at the data, it's really big declines in income at the bottom of the income distribution, and even at the middle, it's a fairly sizable fall. But if you also look in that survey and you look at how many people are employed and how much are they earning, it doesn't match up with what we know has actually happened from tax data, which I guess we rely on a bit more. We feel we can trust a bit more. That's actually that's coming from the payroll transactions that companies are making to their employees. And when you look at the tax data, things look considerably more rosy. And so that means it's really difficult to know how much to trust these income statistics. And it's going to matter a lot for the government in the coming years. They're going to have a child poverty strategy. But if we don't know what child poverty is, because it's dependent upon these statistics, we're going to have no idea whether or not the strategy is working, whether or not they're meeting their targets.
There have been a broader set of problems with some of these statistics as well. Some of the producer price figures were just got wrong. There's been some big revisions to size of the economy and all sorts of other things. And this is it makes life quite hard.
Yeah, there's clearly some questions around how well the ONS is doing its job. But I think we should also make a plea. Maybe our listeners aren't the people who need to hear this. But, if you get a letter through the door that says it's jury service time, most people go, oh, bloody hell, I better go do my jury service. If you get called up asking about how many hours did you work last week and all that, you should be answering those questions. Fill in the surveys.
There we go.
Do your duty to your country.
Your country needs you. Fill in the ONS surveys. That's a marvellous place to end this this wonderful episode of the IFS Zooms In. You can probably tell we're all a little bit sleep deprived as we're discussing Rachel Reeves's first spring statement. And whilst it wasn't in any sense a huge fiscal event, I think it sets the scene for a difficult spending review in June. I think June the 11th, if I'm not mistaken, and probably another difficult budget in the autumn, where we should look out, I think, potentially for some more major tax changes. But we'll wait and see for that. But for now, thank you very much, Tom. Thank you very much, Ben, and thank you for sharing something about your family history and your friends. And thank you, everyone, for listening to this episode of the IFS Zooms In. Please, to see more of our work, do visit us at www.ifs.org.uk, and do consider further supporting us by becoming a member for as little as £10 a month. You can find out more in the episode description. We will see you next time.